Hey folks, Dan Frio here with your real estate news for January 19th, 2026. So the markets are closed today in observance of Martin Luther King Day, so God bless everybody out there, but I'm still back because if you're watching this video, you're probably a homeowner, maybe a home buyer. You could even be a realtor or loan officer trying to figure out, with all the news coming out this week, what's going to go on with those and why? So in today's video, folks, we're going to talk about tariffs. There might be a decision from the Supreme Court this week. And then we're going to get pieces of the information that the Federal Reserve monitors. And what do they monitor? They monitor the economy when it comes to inflation, the PCE, the jobs numbers, and even the GDP. You realize we have all that information coming in this week. So not today, not tomorrow, but the latter part of this week's going to be probably really volatile. So let's see what I think's going to go on with those and why. So let's the first piece of the puzzle we have right through here. The markets are closed in observance of Martin Luther King Day. So let's get over to what's basically going to be the headlines all week. So the first thing we're going to see is right through here. The Supreme Court, they might come out finally with their rulings on tariffs. Now, the Secretary of the Treasury right down through here, Bassett, he says, well, they're most likely going to pass these. Well, obviously, that's what he's going to say. So I'm going to give you the odds of what the odds of this thing of passing and what this would do to mortgage rates. But we also have other pieces of the puzzle that's coming in this week. And this is actually what the Federal Reserve monitors when they figure out what they're going to do with those rates all the way over there. That's the federal funds rate. So what they do is they monitor inflation and they look at the PCE. Okay, that number's coming out this week. They also look at the unemployment numbers. Well, we're going to have a deep dive into this week as well. And then behind my head, they also look at the GDP. I'll be doggone. We have all this information coming in this week. So let's look at it and see, okay, if these come in, which way would they help rates or would they hurt rates? So let's break it all down for you. So right now, here's what we have the news coming in this week. Really nothing today, nothing tomorrow, really nothing on Wednesday, but Thursday, GDP, it's coming out and they're saying it's going to go from 3.8 to 4.3. This number might even be higher than that, believe it or not. But we're also going to get initial jobless claims. But we don't stop there because if you lost your job, that's bad enough. But how hard is it to get a job after that? So we're going to look at continued jobless claims to figure, if you lose a job, can you actually get a job back? That's the big piece of the puzzle we're going to look at there. And then look over here, what we got also, the PCE. So we're getting kind of an idea where initial jobless claims and continued claims go. We're getting PCE and GDP. So if you look at the Federal Reserve, what they look at, everything's coming in today or this week. So what's the likelihood of where this is going to cause rates to go? Well, I'm glad you asked. Let's get over to this, and I'll post it on our website under the blog session. If inflation comes in hotter or cooler, or the labor market comes in hotter or cooler, even the Supreme Court comes in and says, okay, these are deemed legal or illegal, how would all this play a role in rates? Well, let's kind of break it down one by one real quick so I can give you the most logical outcomes on all these. And then you guys let me know down below what you think is going to happen with mortgage rates. Are they going to go up or down? Well, if you're a homeowner right now and you're stuck over 7%, I might have an idea for you. If you go to my website, we created a tool right over here for homeowners to plug in your mortgage information right up through there. It's called RateWatch 2.1. What we want you to do is, what rate would you at least be interested in refinancing? When the rate hits there, I'll call you, I'll text you, I'll email you. I monitor these things. We even have triggers. If your rate goes down 0.5%, you'll get an alert and say, hey, let's kick the numbers and see if there's some savings there. But those are for homeowners out there. So let's go over and see if you're a home buyer, you're just trying to figure out what's going to go on with mortgage rates. Let me go back to that and explain to you guys what I think is going to happen this week, just on this week's data. So inflation numbers are going to come in this week. I think inflation in this reading might be a little bit hotter than expected. So let's look at the numbers right through here. Last core PCE was 2.8. The markets are expecting it to go down a little bit to 2.6 or 2.7. I'd love for that to happen. But I have a theory, I guess I'll call it. I call it the January effect. Here's what my thoughts are. In January, a lot of manufacturers and companies might be finally having the ability to raise their prices. And here's what I mean. Let's say you had a company last year and you got tariffs hit on you mid-year, latter part of the year. And the holiday season's coming out and everybody's just dumping their products. You can't really raise prices. So you're going to wait till January to kind of at least adjust some prices. I think that's what's going to happen. And then when you have oil, oil's been bumpy lately. When you have oil down below $60 a barrel, you're going to start seeing inflation numbers coming down. And then when you have the rent equivalent of housing going to topple as well, you're going to start seeing inflation coming down. But these next few readings might be a little bit hot. But the markets right now are expecting it to be a little cool. That's good news. Okay, so the next thing is on the jobs market. Well, think of it this way, and I always say it this way. Bad news is good news for housing and real estate. Here's what I mean. The economy and the markets and the Federal Reserve, they're saying, okay, if the markets get worse, meaning inflation and the jobs market, we got to cut rates. Okay, so if you have a market that's doing really well, like the job market's doing fantastic, inflation's doing well, there's no need for the Federal Reserve to cut rates. So if you look at the labor market, my thought is it's depleting a little bit, maybe of attrition and things like that, but it's not falling off a cliff. So it might be cooling just a little bit, and that's what I'm going to say there. So I'm going to agree with him on this one. I'm going to disagree with him on the PCE, but that's my opinion. But so if you come in and you have a PCE or inflation numbers that's a little bit less than expected, you don't have a job market that's completely dismal, and you still don't have a ruling on tariffs, what would you do? You'd be like, okay, I'm just going to punt. I'm not going to do anything at this point, and there's really no need to cut rates. So that's my thoughts for 2026. Unless we really see some of these markets really start to deteriorate, which I don't think it's going to happen, but it could. Give me your thoughts down below. I don't really think we're going to have anything really going on with mortgage rates. And I'm saying my forecast for this year is 5.875 to 6.25, and we're right in the middle of that range right now. So if you really pay attention to my videos each day, and it gets a little confusing sometimes, click down there, subscribe. Every day, watch 3, 4, 5 minutes. Over time, trust me, you'll get it. So let's go to the next piece of the puzzle. The Federal Reserve, they're going to meet in 9 days. What are they going to do? What would you do if you saw these numbers and you didn't have this week's numbers? I wouldn't be doing anything. Well, that's most likely what the Federal Reserve is going to do. So now it's saying at the next meeting in January of 28th, there's a 95% chance they're not going to do anything. Same thing at the March meeting and then the April meeting. And then from there, we might have a 50% chance of a rate cut. And that's actually where I'd be on that voting path too, as long as the data stays stagnant to where it is today. Well, it's not going to stay stagnant. It's going to move daily. So that's why you need to subscribe so you can keep up with this daily. But let's get over to the stock market. Here's where the market ended. Well, this is where the market ended Friday. Let's look at the pre-market. This is where it looks pretty bad. So if you look at the pre-market right through here, that's not looking too good. So this is a complete non-Cinderella story. We have the markets coming down quite a bit. They got the Dow Jones pre-market open. This is for tomorrow's opening. They're expecting it to open down 400 points. The S&P down 300 points, but we got oil. Oil's staying below $60 a barrel. So how this is going to affect, well, it's a Trump effect right now. Like I always say, folks, relax. Ride through these, because you're going to look back in a week from now saying, okay, maybe it wasn't so bad. So all I can suggest you guys do right now is just relax, pay attention to the news, and go accordingly. So now let's get the next piece of the puzzle. We're starting to have earnings coming out this week, and there's none today because the markets are closed. So I'm going to come in each day and just give of the corporations, the big corporations that are posting their earnings this week and how they're doing. Last week, the bank earnings came in. They look pretty darn good. So the health of the economy on the banking side's looking pretty darn good. We're going to see how other sectors do this week as well. And then my public service announcement, if you're out there looking for a mortgage or a car, please go to optoutprescreener.com and subscribe down below. What it does is it stops the credit agencies from selling your data. I didn't create this. I don't get paid for it. Please trust me on this one, because you're going to avoid about 30 or 40 solicitation calls if you call us to apply for a mortgage. It's not just me. Any bank that you call to apply for a mortgage or a car loan, please do this to protect yourself. Last but not least, who am I and what do I do? So folks, my name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. I've been doing this for over 35 years. If you need some help with a mortgage, I'd love to help you. We have a slogan here. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. How? Why? Well, join us each Wednesday, and I'll invite you right up through there. We show you behind the curtains exactly how we do it and why we do it. So if you're a homeowner, home buyer, we'd love for you to join us each Wednesday to hopefully make sure you understand a little bit more about what the heck's going on with those and why. So thanks for watching today, guys. God bless. Have a fantastic day. But I'll be back tomorrow at the opening bell to let you know what happens to these and why. Thanks for watching. Have a great day, and see you tomorrow. Bye-bye.